Give everybody just a few minutes. Looks like we have a few people signing in. For those of you who are new, welcome, welcome. We're just going to get started in just a bit. I want to give everybody the opportunity to log in, get comfortable, grab some water if you can. Hello, everybody. Just a couple minutes and we will get started. Hello, welcome. We are getting started here soon. I just want to give everybody the opportunity to log in. Okay, we're going to go ahead and get started. It looks like we have a lot of new participants this month, so I just want to take a few minutes to explain how this process is going to work. So there will be a live question and answer at the end of the presentation if time permits. If you have any questions, please go into the chat box or the Q&A box, which you can find at the bottom of your screen. If you do not see that bar, you just hover over and that should pop up. I will be collecting all of your questions and presenting those to Ashish at the end of the presentation. This presentation from start to finish, including the Q&A, is going to be approximately 1 hour long. So let's go ahead and get started. So today we're going to be discussing from R2 to S4 HANA. What is ERP Fixers? ERP Fixers connects you with SAP experts to obtain quality immediate solutions for your SAP system. We consist of thousands of freelancers globally in all modules who are ready to help and assist with their knowledge in SAP. We offer an online platform, SAP optimization assessment, material ledger, S4 HANA transitional roadmap, and cost transparency reports. For more information about ERP Fixers, please visit our website at erpfixers.com. And today presenting, we have Ashish Sampat. He has presented with us before, so welcome back, Ashish. We're so excited to have you present with us again today. Ashish is a finance and costing professional. He has more than 2 decades of industry experience in the SAP finance and controlling space. He has provided solutions in SAP controlling, including product costing, material ledger, and cost center accounting. He is the author of several books on controlling, First Steps in SAP Controlling, Expert Tips to Unleash the Full Potential of SAP Controlling, and SAP S/4HANA Delta for Co-Configuration. Ashish is based in Chicago, and this is where he works as an independent SAP FICO consultant. Okay, I'm going to hand it off to Ashish now. Ashish, go ahead and get started.
Great. Thank you, Jessica. Thank you all for joining, and thank you for interest in this topic. Why I chose this topic, SAP has evolved as a product over so many years, and our controlling practitioners may be, interested in knowing a little bit about the history, and a lot of what has happened in the past has shaped our future and what we also work on in our today's current setup. So we'll look at the history of how SAP software has evolved, and especially in controlling. We'll look at some examples of how customers have, come up with some innovative ways of improving the productivity. Also, what changes are coming up in HANA. cloud and what all various acquisitions have brought to the table for SAP controlling practitioners. And then in the end, we'll focus about some important design and configuration changes. The four that we want to focus on are around cost elements, part of GL account. What exactly does it mean and what implications does it have? Material ledger is mandatory. What exactly does it mean for those companies which have never used material ledger? And then how do we get breakdown of cost components and the variances in financial accounting, which was not available earlier. So that's a big change from S/4HANA point of view. And how SAP has kind of, shifted towards margin analysis instead of the traditional costing-based COPA while using the account-based COPA. Okay. So let's move on to the next slide. So this is basically going to be our structure. So let's focus first on the history of the SAP software. Now, again, there's not a lot of material available on this for controlling. So let's start with the generic one on the SAP evolution. This slide is something that many of you may have seen. It was introduced with the S/4HANA launch in 2015. Kind of shows the compressed timeline from R2 to R3 to ERP to S4, 79 onwards. But if one were to look at a detailed timeline, even before R2, what happened? So back in 72, when R1 was introduced, R1 is in real-time single-tier architecture. So we are talking about 5 decades of history and 5 decades of evolution. R2 was on mainframe, real-time 2-tier architecture, real-time 3-tier architecture on the client server base, introduced in 92. And then we shifted towards, once the World Wide Web, the .com era came, SAP also shifted to mysap.com. I think many of the practitioners may remember that. And then 2004 onwards, the focus shifted on ERP. As in today, what we see as ECC, the enterprise core component of our enterprise resource planning software, that has some history till 2004. That was also the time when new general ledger was introduced, a big change from the finance point of view. And 11 is when the HANA was introduced for the in-memory computing. To share my experience, I started in 98 when R3 was in vogue. The first version that I worked on was 3.0F. So what we said today, ECC 6 used to be, R3 3.0F is when I started. And in the last 24 years that I have worked on SAP, I've seen, a very stable increase in functionality and features for many areas, including controlling. A lot of features have been improved. A lot of features have been built upon further. Very rarely you'll see some feature which was available earlier is taken away. It's usually, improved. That's what I'm sure everyone's experience has been as well. Okay. So looking at the R1 system, and again, what real-time single tier, it established all presentation layer, application layer, and database layer in a single place. And that's how it was known as R1. Interestingly, it was purely financial accounting system. And then later it evolved into an enterprise resource planning or ERP space, where it introduced materials requirement planning, that is typically part of our MM planning module, and then sales and controlling and production and other modules were introduced. So that's just one part. And then when R2 was introduced in 1979, that's when the first time RK, that is controlling, came in. Now, a lot of practitioners may remember RF. Many of our finance programs start with RF. As in, if we talk about F.01, which is our trial balance or profit and loss statement or the balance sheet report, its technical program name behind the scene is RF BILA 00. So that RF comes from there. Another example, when we talk about settlement, CO88, its behind the scene program is RK07 CO88. If we talk about assessment, KSU5, behind the scene program is RKGAL KSU5. So that RK and RF are kind of driven from that standpoint. And in the old days, materials were RM. So when you talk about materials program, let's say MM period roll, RMMM peri, that again RM comes from the RM of the materials management. Same way RV and RP. So in fact, what we call today as FI and CO were called RF and RK in the old days. That's what this history kind of tells us. So you'll notice a lot of source materials given at the bottom of each of the slide. Of course, I have not invented any of these. I have just gathered this information from various sources, but a lot of interesting history. The main interesting part about the R2 piece is that the application and presentation layer are kind of combined, or rather, I want to say the database application layer are combined, presentation layer is separate, and that is what came up in R3. We will see that shortly. Yeah. This is how the R2 screen, login screen looked like. And many of you may, laugh looking at this. But, interestingly, this is what we had in the late 70s, early 80s, more of, DOS-based system. GUI was, not very well known or not well introduced to the world. But those days, again, we had, this kind of a screen. So user ID, password, new password coming up all the way down at the bottom. Today, of course, when we look at the GUI, it would be, top left. And when you're using Portal or, Fiori or other setup for logging into the system, you have a totally different look and feel. So this is just one feature that this article captured. And I really like this picture right here. Okay. The R3 Enterprise Edition. So here is where you'll see database, application, and presentation layer all combined into one. That is one of the other piece. And then the ABAP 4 programming language, the one that we use for either standard program or customized programs, is all again part of the what was introduced in the R3 edition. Yeah. And again, the modular structure was kind of brought in during this time frame with the R3. And that's what you'll see in the upcoming slides. In my SAP ERP, now what you'll notice is in the older days, R3 up to 4.6C was the application and basis layer. But with the enterprise layer, you started with the enterprise core. So even today, when we talk about enterprise core component, or even in S4, S4 core remains same. The others, are all built around it. That's how they want to talk or explain. And then there are my SAP ERP editions, This, eventually went into SAP ECC 5, and then what we see today is ECC 6. So that's just one depiction. One very important piece, this is also the time when other product suites started coming in, SRM, CRM, PLM, and SCM. These are kind of satellite systems built around the SAP ECC or R3 core, and all these systems sit outside of that. So many of you may have seen, interfacing systems which are kind of talking to each other. Most of them, will be sitting outside of SAP. There will be some, in the past, there were some modules, strategic enterprise management, which were kind of, some of them were part of SAP. So R3 based SCM, BCS that may have been used. So lots of combinations that have been introduced. Yeah, and this is one part, back in 98 when I started working, this used to be the slide that used to always be there in the explanation that SAP has the modular structure, but all these boxes, are tightly integrated, and that's where the power of integration comes in. And again, this one was being spoken from the business suite point of view. This one is around our core component, the one that is 2004 onwards. Many clients already still continue to use this. Those who have gone to a greenfield S4 HANA, we have already started using S4. But again, this kind of shows the evolution. 4.6C enterprise, ECC 5, ECC 6. And then from 2006 onwards, the enhancement pack started coming in. So today, we may say that, I am on ECC 6 enhancement pack 7, which means the one that was introduced in 2013. We continue to use. Now, enhancement pack has, multiple messages, SAP notes, as well as new features that come up from time to time. So enhancement pack 4 is when log SIT was introduced, which is our valuated stock in transit, which is a big benefit to finance and controlling personnel. Mainly because you can see the stock coming in from vendors to us or intercompany to us in terms of, if it's been shipped from a far off place and I'm yet to receive the ownership, how would I do that? In the past, we used to do manual journal entries, but with log SIT, you can, include it in your books of accounts right away. Okay. HANA was introduced in 2011. This is more from the database point of view, but this was one big leap, if you want to call it that way. Again, in-memory, column-oriented, relational database management system. A lot of pain points that a lot of clients had around, my WIP variance settlement takes long time to run, or my material ledger takes long time to run, or certain other processes, variant configuration take long time to run. That's where, HANA in-memory computing was introduced. Various other features also introduced in terms of predictive analytics and so on. Now, this itself became the basis for our S4 HANA, the one that is introduced since 2015 and the one that, is going to be the tool of the future or the product of the future for many clients. One big change was the Fiori, as in the user experience. And as you may have heard, that SAP has not had too much success in giving a graphical user interface which will appeal to many users. Many people found it very clunky or saying that, oh, it's not very intuitive. Well, one argument for that is it's a business system. It's not like a website created for an end consumer. It's a product software created for a business, which many of them multi-million, multi-billion-dollar businesses. So obviously, process is more important than the actual technical work. But anyhow, this Fiori is introduced, which kind of brings in a unique, similar experience that you can have from whether you log in from a mobile device or a tablet or a computer or a PC or a Mac or whatever. And that's the main, selling point from Fiori. Of course, there are many other things like Internet of Things and so on, which have been kind of combined. This is all on the backbone of the S4 HANA. So that's about the background. So let's talk about the CO-FI real-time integration. Again, controlling to FI. So if we talk about the classic GLPs, when entry is made in controlling, it did not go to FI directly. We used to run a month-end program called KALC, Reconciliation Ledger Transaction Code, KALC. Now, what that transaction will do is it will find out what all movements or postings have been done purely in controlling and then write them to financial accounting. Why? Because you want to keep both of them in sync. But again, this is not done on a real time. That's when the new general ledger introduced the CO-FI real-time integration. So if we look at this one example of assessment as in you are sending costs from one cost center to another. So 4200 is sending the cost to 4100. A secondary cost element 700010 is used to do the transfer. The entry that happens in FI during that time is this reconciliation account is used, 49998, 49998, debit credit goes to the same account. You do have little bit visibility of what cost center the transfer took place from, but you don't really get to see what was the original account. And this is where, when as an accountant who's purely focusing on financial accounting, I go in and look at this detail of the account 49998. I see total balance is 0, but when you drill down, you'll see lots of ins and outs similar to this one. So a lot of people started asking, oh, you know what, it's not giving me the right picture. But well, the idea is to reflect what happened in CO and if there was any profit center transaction. So from that standpoint, you're keeping FI whole at profit center level, just that the account is different. Now, if you may ask, oh, where exactly does this reside? It's basically in the setup in OBYB or OK17, where we say that for this CO transaction, please use debit and credit GL account 49998. You can differentiate that RKIU assessment or RKL for activity allocation or KZPI for overheads. Please use a different account. But you cannot say that for this account, use a different account, or versus 70020 use a different account. That is not possible in standard SAP. You can overcome it or come up with some innovative idea to replace this. And that's what we'll see in the next slide, that for FICO real-time integration, the requirement is to have different account in FI for CO secondary postings. So what the example here we are talking about is that for benefits accrual overhead posting that was posted in the CO side, as in this example, traditionally I am used to seeing 49998, but my requirement is I want to see a different account 45000. How would I do that? One can do that through CO substitution, OKC9, where we say that we introduce these two steps, prerequisite, that if account is this and debit side is this, substitute it with this GL account, and debit credit indicator is D, then substituted with this account. So that's something that a lot of clients have done. So again, this is an optional feature, but sometimes can be useful for differentiating what type of posting comes in from the CO side. Yeah, that's the example. Looking at this CO real-time integration from CO to FI, the one that was responsible for the features that we saw, this specific configuration step is obsolete in S4HANA. And why? We'll come to that. It is not required in S4HANA. And basically, it's got to do with the way the GL accounts and cost elements are set up. But the main idea is that, so let's take a step back and understand. In the classic GL, we used to have KLC, reconciliation ledger. In the new general ledger, we have the real-time integration, but there a lot of, it was a leap forward, no doubt, but the account was always confusing. So now with S4HANA, we have gone one step ahead and said that let's integrate cost elements and GL accounts and say that whatever posting happens in CO is automatically reflected in FI with the same account. That's where that advantage or benefit comes in. So that's the piece we want to talk about. So, but then when you are going to S4HANA and you trying to look for this integration, real-time integration configuration, you'll not find it. So don't get surprised. It's because it's not relevant. That's why it's taken away. Yeah. So the other piece with new changes is around the extension ledger. So this particular transaction, FinSC_ledger is the configuration transaction for ledger. So 0L is of course the base ledger that we always have, the leading ledger. Now you'll see new terms here on the ledger type. That's a new field that is available, standard ledger or extension ledger. And if it's an extension ledger, there is another subcategory, extension ledger type called simulation ledger, prediction ledger, and so on. So a lot of people may have asked, oh, what exactly will I use an extension ledger for? So if you remember in the past, FI used to have its own set of tables and CO had its own set of tables. But now everything is one, AC doc A, as in actual document or accounting document actual, I'm sorry. The other one, AC doc P, is accounting document plan. So this AC doc A, or the actual or accounting document actual, is a single source of truth. But now if I want to do an adjustment in in internal reporting, how exactly would I do that? In the past, we were doing it an entry directly in CO, do some sort of allocations, or sometimes in COPA, people used to do a KE21 and posting. But now with everything reporting from AC doc A, the challenge comes up. If I were to do an adjustment for management reporting, then the answer will be through extension ledger. Through extension ledger with simulation. Why? Because extension ledger also posts to AC doc A table. So when you add up both of them, the leading ledger and extension ledger, you get to see the full picture. So this is basically to get the controlling flavor, if you want to call it that way. So a lot of people have asked, oh, with S4 HANA, CO has lost its importance. So, and we'll come to that, but one example is that a lot of CO features, they continue to operate. The assessment of cost allocation or activity allocation or the actual costing part of material ledger, that continues. You don't, do away with them, just a different way of handling it from the financial accounting point of view. So this is the classic GL, KLC, where AR and AP line items, this is the F.5D1 KEK for classic GL, not the reconciliation ledger. So basically at the period end, we used to transfer the payables, receivables. Normally they don't have the profit center information. So at month end, we can transfer the profit center info through balance sheet adjustment. Now in the new GL, it was document splitting basically. So when you do the entry, we never enter the profit center at the customer level or at vendor level, but in behind the scene through document splitting, it allows us to see that. So again, this is an old feature, F.5D1 KEK. Similarly, there is 3KE, 3KEI. That are again part of classic GL. But if you're not using classic GL, again, you probably have not heard about this or don't need to use this. So let's talk about changes brought by HANA and cloud and various other acquisitions. So if you look at this one picture, left side is the ECC flow or classic GL flow also, as you can call it, or R3. On the right side is the S4 HANA flow. Note that even though general ledger is at the center and is being fed by many of these modules, there used to always be reconciliation challenges between overhead controlling and material ledger, or material ledger and profitability analysis, or COPA as we call it. Why? Because a lot of reporting was done from these individual boxes. Most of reporting is from general ledger, mainly for external reporting. But for internal reporting, we use a lot of these boxes, right? Now with S4, everything is in the universal journal or table AC doc A or AC doc A or accounting document actuals. This is the line item table as well as totals table. Here we used to have line item and totals table different. And then overhead controlling, general ledger, asset, material ledger, COPA, they all feed to the universal journal. And that's where our unique or single report, single source of truth or reporting comes in. So even though a lot of tables, and this might get a little technical, so we may have to keep it short, that a lot of tables that were available here for indexes or indices. So as in general ledger, open items and cleared items, and then the totals table. Here, a lot of those tables have been eliminated, especially the index tables. So whereas we introduce AC doc A, BSEG, BKPF, those tables remain, but BSIS, BSAS, BSIK, those open item, clear item for vendor, customer, GL, they have been removed or changed to a view option. Instead of update option, it's more of a view. So that's how the transition is handled, if you want to put it that way. So this is one big change. This is from the finance point of view I want to highlight. Other one is around the S4 HANA releases that, you may have heard that the year and month are kind of embedded in the naming convention. So when you say that I'm working on S4 HANA 1709, it's the September 2017 version. Somebody says 1909, it's September 2019, and so on. But from what we know, that of late, SAP has now switched back to the year. So if we say year, I'm working on HANA 2021, it would mean that it's the 2021 version. A lot of acquisitions. So again, this is not an exhaustive list, a very small list of what has, big ones or those that have impacted the finance. So a lot of people may have used the firefighter ID, FFID through Versa VFAT. So that used to be a dedicated company, got acquired by SAP and now part of our software. So that was acquired in 2006. Business Objects, Outlook Soft, they were acquired. Outlook Soft, of course, for financial consolidation. Today, we have a lot of financial consolidation in terms of group reporting. In the past, it used to be BPC, BCS, and all those. Outlook Soft is its own one. BOBJ, or Business Objects, as we call it, was also an independent company. Success Factors for human resources, Ariba for procurement, Hybris for integration, Concur for travel expense, Fieldglass again for human resources. So what you'll notice is that most of these acquisitions, investments are beyond the SAP core. Core has remained as it is and has been improved, of course, over so many years, but a lot of focus on the other acquisitions in the spaces outside of the SAP core, more in the additional features or internet related stuff, or totally different features in HR and other areas. Okay, let's now focus on the design and configuration changes. So cost element part of GL account. I think we discussed this earlier as well, but this is a picture that you'll get it. So when you go to FS00 or FS03 transaction in S4 HANA, you'll now see this cost element category, which will of course be, if it's a primary cost element, then you have 1 or 11 or 12. But then this is a secondary cost element. So now you see assessment as one of the options here. Apart from that, we'll also see GL account type. We'll have primary costs or secondary costs. So if you remember, these two fields were part of cost element, KA03 or KA01, 2, 3, 6. Interestingly, these transaction codes will now point to FS03 or FS00 in the S4 HANA version. So then a lot of people may ask, oh, if cost element is part of GL account, so what happens to cost element groups? So that part remains, that KAH1, KAH2, KAH3, that remains because you want to continue with the cost element group reporting. And a similar question may come up. What can I, now that cost element is part of GL account, can I make a direct journal entry to a secondary cost element? That's a natural question, right? But the answer is no. For making an entry to a secondary cost element, you have to use your own source transaction in CO. So as an example, for assessment, we should continue to use KSU5. For overheads, you should continue to use the overhead transactions like KZPI and so on. And then for settlement, you should continue to use CO88 and so on. So again, it's not that, those because these are part of GL account, I can make a posting to internal activity. You still have to use KB21N or COR6N and so on, right? So that's an important piece. So this brings us to the same example that we looked at, the assessment example. That one we looked at from the point of view of the real-time integration. Now we'll see how this entry will come up in S4, a similar entry. And that brings us to the next line. So here I have a secondary cost element, which has been used to do an allocation between cost centers. So there are 4 times 2, 8 lines. And those same 8 lines with the same account are available in FI. So now think about the power that this brings to an accountant. It is not that, this has added any, feature to the system in the sense that Allocation still continues in KSB5 or KSU5. This is our CO document. But now CO and FI document look very similar, which was not available earlier. In the past, accountants used to go to CO to look at the data. And now here we can look through directly in FI what kind of allocation transaction took place. I personally feel this is a very powerful feature for S4. And again, the root cause or the main requirement here, and we should go back to the previous screen here, where we saw all reporting being done through AC Docket, Universal Journal. In the past, for the assessment, I had to go to overhead controlling to see what the behind the scene transaction was. And general ledger used to give me one common account with in and out. Here in S4, we can get to see the detail in FI itself. And therefore, we can continue to use AC Docket for our reporting. So huge implications for finance and controlling professionals. Material ledger mandatory. This is another feature that has made a lot of people nervous, but I personally feel there's no need to be nervous. When we say that material ledger was optional in ECC, there were clients who have activated it if we want to use the actual costing functionality. But again, it's optional. But with S4 HANA, material ledger is mandatory, but I have to highlight that it's only the price determination 2, which is the transaction based, which is mandatory, not the price determination 3. So if you were not using actual costing earlier and you don't want to use actual costing now in S4 HANA, that is an option. Unless you have a business requirement, there is no need to activate price determination. Where can we find it? In Material Master, Accounting One View, if you have material ledger activated, you have the option to select 2 transaction based or 3 single multi-level. This is from a plant which is already active in an S4 system. Now, the very moment I say that I am using 3, which means actual costing is active, which means the material ledger related transactions, CKML, CP, all become a requirement that unless you run them, you can't close your books. But with 2, you don't have to run any of those transactions. Data is available. Whether you want to use it or not, that's a different thing. But now this is important that AC Docket has all transactions related to price determination 2, transaction based, that's built in, readily available. But the actual costing piece is all available in the ML Doc or ML Doc CCS. Those are the new tables that are introduced. And why did SAP do that? Let's think about it. In the past, the valuation used to come from MBEW table, even today in the new world. But this MATDoc and MLDoc are tightly integrated. In the past, there used to be separate tables for material ledger, MLIT as material ledger items, or MLHT material ledger header. They have all been merged into MLDoc. And then there is another big feature, CKM3. Today, if you go to CKM3, want to see the price determination structure. If you want to see cost component view, you have to flip the view and go to a different view. Now you don't have to do that switch. It's all available as additional columns in the end. So that's another unique feature. So again, no need to worry that material ledger is mandatory. What am I going to do? Well, it's a good product. But if you don't want to use actual cost, price determination 3, that's fine. You can simply skip that. The other change that has happened is in the material ledger closing cockpit, the CKML CP transaction. So in the past, or even today, I'm sure a lot of people are using this. So when I say in the past, it's the ECC version, and in the new feature, it's the S4 version. So multi-level price determination, revaluation of consumption, post-closing, and then even the WIP revaluation, if used, are all part of the same, are 3 different steps. In S4, they are part of the same step. It may say, it may reduce a little bit processing time, but why did SAP do that? Again, the table structures have changed, and that's why, a lot of these features have changed. Let's look at cost components and variance breakdown. This is yet another nice feature. So what it allows that in the ECC version, when you are using the costing based COPA, the variance breakdown and the cost of goods sold breakdown is available in CO, but FI does not get that breakdown. And we can look at that example, and we'll come back to this screen as necessary. But this is the ECC posting. When you look at the FI posting, credit inventory, debit cost of goods sold, but the cost of goods sold split is available only in COPA, the right-hand side document. So if I want to say what makes up this 27,000 of cost of goods sold, tell me how much of raw, pack, labor, overheads, fixed cost, or how much is set up. I can't get that. I have to go to COPA to get that data. This is one of the examples where reconciliation always used to be a problem, especially when there is a timing mismatch between the PGI and the invoice, or invoice versus, invoice goes in error and you can't close it towards the end of the month. So those are the issues. So now in the new version, in cost of goods sold posting in S4, you'll now have two documents. First document will have the inventory and COGS entry. The other one reverses the COGS entry and then posts the three different cost components in this example that were responsible for this posting. So that's one feature. So if we go back, it basically says that what was your source account? This is the COGS account. This is nothing but our PRD, PRF account, or GBB VAX account. I'm sorry, PRD, PRF comes up in the settlement. But for each cost component, I specify a unique GL account, saying that if source account was this, please replace with cost component specific GL account so that I can record it in FI. Now this configuration is a bit kind of hidden, so want to be careful. Financial accounting, general ledger, periodic processing, integration, materials management, define accounts for splitting COGS. That's the part. And similarly, the variance split is also available on similar lines. So that brings us to this variance split. So these are the 9 variance categories that we have, including price variance, quantity variance, and so on. Each of them are mapped to individual accounts and their menu path is similar. This was not available in ECC version, that FI gets only one account, the price difference account, PRD, PRF. We can't see how much of that variance is related to price variance, how much is usage variance, how much is output price and scrap, and so on. So if we have to do this analysis, we have to go to COPA. Variance breakdown is only available in COPA. So whatever 1023 difference came up, we know, okay, it was more adverse input variance, but favorable usage variance. And then there was a minor remaining variance. Now with the S4 version, we get to see the variance detail in financial accounting. So the two variance categories that were in use, resource usage and the remaining variance, they are showing up here. So I of course have the total showing up against the PRD as transaction, but then the breakdown is also available here. So the line item 2 and 3 are kind of offsetting each other, and this was the order cost was debited, and then the remaining amounts came up with the two different variance categories. So that breakdown again will be very convenient to folks who want to get that info from financial accounting itself. No need to wait to go to CO for this breakdown. So that's a big feature. The other one is around shift towards margin analysis. So again, when we talk about current setup, account-based COPA, costing-based COPA. Account-based COPA is purely linked to GL accounts, as we know, whereas costing-based COPA uses value fields. Value fields are more of summarized versions of GL accounts. So if we say sales, there'll be 7 or 8 accounts for sales, but on the COPA side, I just have one value field for sales. Same way for cost, I have only one account for cost, but could have multiple, value fields for cost depending on the cost component. So what has happened is in ECC, costing based COPA had many advantages than account based, but with S4 HANA, most of those limitations of account based have been overtaken or addressed. As an example, COG split, the one that we saw just now, same with production variance split. Both these information are available in financial accounting. Another one is realignment. KEND used to work only for costing based COPA. Now realignment is available even in account based COPA under S4 HANA. So in the past, we used to have, in order to do reconciliation, that was the biggest challenge with costing based COPA. And that's where, the shift towards account based COPA has come up. And now you'll hear the term margin analysis. So again, SAP has, changed the naming convention a lot in the past. What used to be known as account-based COPA is now account-based COPA based on universal journal, or margin analysis based on universal journal, or margin analysis based on account-based COPA. So all these different names, but these days the name is margin analysis, simple, in S4 HANA, which basically assumes that account-based COPA is used. Now, this is where the question comes up. If we are on a brownfield project, as in already using ECC, want to go to S4 HANA, what choice do I have? One, account-based COPA will be activated by default. Why? Because it's part of AC.K, and that's where account-based will always be there. Question is whether you want to activate costing-based COPA also. It is an option. If you don't want to activate, that's fine. But what will happen to the reporting? What exactly will happen to my past history comparison? All those questions are very valid. And again, there are no good answers. We can only look at options. But one thing that has been more of a kind of a general recommendation from a lot of consulting community, as well as implementation partners, as well as SAP, is that continue to use costing based COPA at least for a couple of years. That way you become familiar with two different versions of COPA, account based, costing based. And then in future you want to deactivate optionally once you're comfortable with account based COPA. Now, does it also mean that, what if I say that, if somebody can help me transfer the history or restate what I stated in costing based COPA to account based COPA, do I have that option? Not through standard SAP, unfortunately. Why? Because as we discussed, value field is a summarized value of accounts. Now you want to split it back again and say that, oh, now I will identify the account where it was done, and then therefore restate from costing based to account based. No standard tool available. That's where a tool from Windshuttle and ERP Fixers is going to be very useful to clients. Again, it's not standard, it's a separate service, but something that you have to think about. Another option that is coming up is, can I activate ahead of time? That way, I'm able to build history. So if you are saying that, oh, I want to move to S4 in 2026, can I activate account-based COPA in the ECC version a couple of years ahead of time in 2024 so that it starts building history? Then I have better decision or better information to make the decision of whether to discontinue COPA at a costing-based COPA at S4 conversion, or use it for another year or two or so on. Those are the kind of scenarios that you can think about. And then this one is more of a picture that speaks about the comparison between the two options, the costing based and account based. So costing based COPA, the one that is currently most widely used in ECC, and that same features are available in S4 HANA also. But when you look at account based COPA in ECC, not many details are available. So when you talk about these blue color values of cost of goods sold, costing based COPA has more detailed breakdown, but in financial accounting and account based COPA, just summary. Same with production variance, just summary. But based on what we saw a few minutes back on the new feature for COGS split in FI and production variance split in FI, those blue and orange or peach ones, they have more detail available. So in other words, whatever I was able to do through costing based COPA earlier is available in account based COPA. At the same time, the reconciliation is guaranteed. Why? Because you are sourcing it from the same place, AC DOCA. So financial accounting is in AC DOCA, the account based COPA or margin analysis is in AC DOCA. So the data always has to match. That's the idea and that's the focus. And this is where the future of COPA will be, based on what SAP is telling us, that costing based COPA, there may not be too much investment in that product, but account based COPA will be the way to go. So let's look at other features and innovation, and we can spend a few minutes on questions. Several good features available. One is, of course, Fiori, and we have an example coming up. Another one is semantic tags for reporting. So if you want to talk about, financial statement version F.01, where we have the GL account details and the balances, there is a way to design it in a flexible way based on semantic tags, and that's again a very good feature. Semantic as in what we say in general terminology, that's the way. The other one is cost components. Today the maximum allowed is 40. In future it will increase to 120. Optional, you don't have to use all. In fact, today also there may be many clients who may not be using 40, but then there are some who are stuck at 40. I want to use more details, but system is not allowing. Well, there is a limitation. So go to S4. 1909 is when it is introduced. 1909. And then CK40N has some simplified steps as well as recurrence features. So again, that kind of helps in the costing run point of view. Attributed profitability segment is another feature when you say that I don't want to wait till month end. Can the system allow me to see what the settled values will be without running settlement? That's where this comes in picture. Core data services or embedded analytics. So if you think about it from query point of view, SQ00 or table queries. So this is more of table join in a very crude way, but again very powerful feature. The other feature that a lot of controlling and product costing practitioners may find it useful is production and operation level info in CO. So in the past, if you remember, we used to stop at cost center level. It does not tell me what operation or the work center you're looking at in the financial tables. That is now available. Real-time WIP variance is also another feature that's available. This is an example of Fiori. So what I have is the KSB1, CO line items. Left side ECC, right side Fiori or S4 version. Selection screen and output, they're both similar, just that the look and feel is different, and some people find the Fiori more intuitive compared to the SAP's GUI. If you ask me personally, I've gotten used to SAP GUI so much that I sometimes find Fiori a bit clunky, but it's probably just the mindset and getting used to it. But it's just one feature. A lot of organizations have taken a stand that end user business transactions will be on Fiori. But then if there are configuration or maintenance transactions, they will be on GUI. This is the cost component piece. You get stuck at 40, but then with S4 HANA, you have the option to get more to 120. It's basically update to KEPH. They've added more columns towards the end. And obviously when KEPH table for cost components on standard cost comes in, even the CKML KEPH logically will have that additional feature. That's the idea. But then that is part of MLDoc CCS table. The table has changed, but the feature is improved. Another thing is around the transaction code. So in the past, we used to have transaction codes for WIP variant settlement, KKAO, KKS1, CO88, and then similar one for individual processing. With HANA, you have H at the end. Those are optimized to work for S4 HANA table structures. That's the main idea. And then look at the resources very quickly before we go on to the question answers. Again, history of S4HANA, this was one article which I used extensively to look at the pictures and the history earlier. Martin and Sydney McConnell, Martin Mansell, Sydney McConnell have a very good book on first steps in SAP, published by Espresso Tutorials on, first steps. So that's where I picked some of the information for S4 definitions and so on. Delta for CO configuration. This was the book, the third book that I authored that has a lot of the info that we went through on the important design and configuration changes. This FI version of this topic, the Delta for S4HANA Finance by Una, again published by Espresso, is a very good resource if you're looking for Delta changes. Material Ledger in S4, this is the book published by SAP Press, authored by Paul Ovigele of ERP Fixers, very insightful in terms of Material Ledger. So whether you want to use transaction based or actual costing, 2 or 3 price determination, both are well covered here. Then this book on migration to COPA by Ajay Maheshwari, again by SAP Press, very insightful in terms of what it takes to do the migration and what options do we have. Okay. And this is the picture of my book on the Delta for CO. And then this one are the first and second book. First one is more of a beginner's book. Second one is more of an advanced practitioner's book with tips and tricks. And that should bring us to the questions. I hand over to Jessica.
Thank you so much, Ashish. We appreciate that informative presentation. Before we get into the question answers, we did have somebody ask if they could have a copy of the slide deck. Ashish, I will leave that up to you. However, just so everybody who has registered and is attending right now knows that ERP Fixers will be posting the recorded session as well as all the answers to the questions asked today on our website and on YouTube. You guys will also receive an email with this information and these links sometime next week. So you will have access to this ongoing. Okay, so getting into a bunch of questions that we had popped up, we only have a few minutes. One of the questions is periodic evaluation, KE27, available in S4 margin analysis account-based COPA?
Yes, that's a very good question. So if we talk about the production variance split or the COG split, so here the question is, the COG split, the example that we looked at was more of standard cost. Can I change it to actual cost? The answer is yes. With 2009, as in September 2009, September 2020, that option is available. You can evaluate using the actual cost through K27. Similar feature.
Okay. Let's see. Can we have more details on COPA account-based versus margin analysis?
Yeah, that's a good question. I think, at the very fundamental level, they are same. Margin analysis in S4HANA is built on account-based COPA. So if you want to say that, I've used account-based COPA and I'll be comfortable with the margin analysis, that's great. But if not, I think there'll be a little bit of learning for those who have used COPA in the past. On the costing based side, you may have to learn a little bit on the account base, but good news, reconciliation is guaranteed because they are both from the same source in S4.
I think that's all the time that we're going to have today. There was tons of questions that came in. Again, for those of you who we couldn't get to your questions, we will be posting the answers to these questions. I know we've got quite a bit asking about S4HANA 2021. So we'll have those on our website. You guys will also receive an email next week. Ashish, thank you so much for joining us again. We always love having you present. It's very informative. And for all of you who joined in today and listened, we appreciate you. Have a great day, guys.
Thank you all.